Good morning, Market Chameleons and everyone for coming by. Join us for the webinar. Thanks for coming by and joining the webinar. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Dimitri, Market Chameleon, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, are for informational purposes only. If you're searching for investment advice, please reach out to a licensed professional. Let's take one last look at the disclaimer and hold on a moment. And we'll welcome Dimitri to the stage now. Let me remove the disclaimer. And there's Dima. How are you doing this morning, D?
Hey, Will, how are you? Good morning.
Good.
Let me share my screen
Today we're
here.
going to be talking about how to screen for options IV versus historical volatility. Is that correct? Look maybe at some trading opportunities and insights.
Yep. Good morning, everyone. And yeah, I'm going to go straight to the screener. And to find that screener, if you go up to the main menu under options and choose, under screeners, and then go to options by expiration. So that's where we're going to find our screener. Click on that. You come to this page. And what we're going to do is look for a screen that allows us to look at a specific options expiration and compare the implied volatility in that expiration versus historical volatility, so we could see how far away it diverges from that historical vol. And typically this is done by traders to see or screen for options that appear to be either priced below the historical realized volatility or above the historical realized volatility. Now to go to this page, we have before we do a screen to cover what's on this page, we have up top these filters, and then below we have a data table with analytics. We also have these different tabs that shows different analytics. We're going to go to the second tab, historical vol. And I'm going to read you from left to right what this data represents, and then we're going to do a screen. So here we have the stock symbol. If you're curious about what the stock symbol represents, if you click on this info sheet, it'll tell you more about this particular stock. You have the name there. You have some more financial data you could read about, look at charts. I'm going to close that. And here we have the stock price, the percent change on a day. And here, this is anchored by option expiration. And when we look for implied volatilities, especially implied volatilities that are actionable and tradable, we reference these at the money implied vols by those expirations, because we have different expirations, and those expirations could have different implied volatilities, right? The stock itself doesn't have an implied volatility. Implied volatility comes from the option prices. So here we are referencing the option expiration. Next to it, we show what the implied volatility is for the at the money options in that expiration. Next to that, we show the change in the at the money implied volatility on the day. So similar to how we look at the change in the stock price on the day, we look at the change in the implied volatility on the day for that option expiration. The next column is the volume that traded, the option volume that traded in that option expiration. As you can see, for this particular stock, there's zero volume. Nothing's in there. So let's do our first screen to look for option expirations that have some volume, that there's actual trading going on. And this, what this does is allows us to filter out option expirations that people are interested. There's trading going on. It's easier to estimate the price discovery process, because we could observe the trades and where the implied volatilities have been trading. And usually there's more liquidity because these are actively traded options. I'm going to go to the top filters above here, and we're going to look for option volume. And let's drop that down, and it gives us different options. And we're going to go for over 5,000 contracts. So I'm going to click on that, and now we filtered out here the stocks, the option expiration, implied volatility change, and the amount of option contracts that traded in that expiration. Okay, so this one's looking at the June 20th, 25 expiration. Then we go to some analytics so we could get an idea or a reference. What is this current implied volatility relative to the historical volatility in the stock? Because you could see here that we have different implied volatilities all over the place, but those volatilities, they're different, but the volatility of those stocks are different as well. So not all stocks move at the same volatility, right? And there's some stocks that have a lot of liquidity and move at typically at a smaller volatility. Some move at a typically higher volatility. So we need to kind of put it in perspective what this means for this particular stock. So over here, we start using some benchmarks. And we first look at the, in this situation, the 20-day historical volatility in the stock. So what did this stock actually move at? What volatility in the last 20 days? And here we use this open, high, low, close vol. So this lets us compare the implied volatility in this expiration relative to how the stock has been moving in the last 20 days. How far apart are they? Is the future expectation of volatility much higher or lower than we've seen in the most, let's say, recent history, the last 20 trading days? We also can look at a longer term volatility, because volatility itself is considered a mean reverting stat or metric. So what has the stock moved at in a longer term period? So here we look at a 1 year period. So this is using open, high, low, close volatility calculation over 1 year. And here we see it's 40.8. So you can see that the most recent volatility in the last 20 days has been trading lower than its 1 year volatility. Okay. So now, how do we compare this to where, the implied vol? Now, this is the implied vol from the option prices. This is where the traders are pricing in options for forward volatility. Right? This is going to June 20th expiration, and they're pricing it at 43.5. So what is that relative to the 20-day? So here we see that's 28% higher than the 20-day vol. Okay. What about the longer term? Well, that's 6.7% higher than the longer term volatility. So much closer, right, to the longer term volatility. It's higher than the 20-day, but as we could see, the 20-day has been trading below that 1 year. So this gives us quickly a way to filter out, maybe specific scenarios we're looking at, and just compare even groups of stocks if we wanted to, say, filter by a group of stocks in your watch list, or or even from your screener. Okay, so if you save the stock screener, you could filter out from here too. So let's look at a situation where maybe we're looking at a specific expiration. Okay, because we have lots of different ones here, So let's take a look at a specific expiration. So we go over here by expiration. We have all these selections, and let's say we are looking at April 16th. Okay, click that. Nope, nothing on April 16th. Let me see, April 17th. Okay, April 17th. So April 17th, we have 161 expirations that meet the condition that the volume has to be over 5,000 contracts in that expiration. So you could see here XLV, XLCID, and here we could see that these are the implied volatilities that are up on a day. If we wanted to sort, we could look for implied volatilities that are down on a day. So by clicking at this column, this will sort it from highs to lows to highs. Okay, so here we see the IVs that are down on a day in these stocks. If we wanted to look at the ones that were up on a day, we sorted. These are the highest implied volatility of movers. Then moving across, we could see the volume, and then the 20-day and 1 year volatility. And here we see the relative difference, right? The relative difference between realized and implied. And we could sort these columns as well if we wanted to see the ones, where the implied volatility is below, the highest below, down. This is 39% discount, 36% discount. If we click on this 1 year, here are the ones with the highest, 125% premium to the 1 year, 99% premium to the 1 year. Okay. And we could also just use our filters over here. If we wanted to, let's say, even look for specific vols that were above or below, let's say we're looking for very high implied volatilities, we could click on this, and let's say we're looking for implied volatilities above 90. Maybe that's our criteria. We like to trade, let's say, high vol stocks, right? Not low, but just we like high vol. So these are at implied volatilities that are all currently above 90 in the April 17th expiration, the one we selected, meeting this condition, option volume above 5,000. And let's say that we are looking for implied volatilities that are up on a day. We want to see something that, there's pressure on the implied vols, and that they're increasing. So we could do over here at the money IV change, and let's say we want it to be up at least 10% or more. All right, so now there's only 3. Okay, so we narrowed that down very quickly. Let's go here. Let's pick 3%. Okay, so now we got 6, narrowed it down to 6. And let's say that we want implied volatilities to be above the 1 year by a certain percentage. So let's say more than 25%. Let's select that. So now we only have 2 options. So you could see here These are implied vols are high. They're up on a day with volume above 5,000, implying that there's that there are more buyers or people pushing those vols higher, and they are above the historical, long-term historical by at least 25%. Okay, so that's really quickly where we could narrow down the potential candidates to go and research further. Let's go the other way. Maybe what we want to do is look at where implied volatility is high, but maybe it's down on a day, it's starting to downtrend. So let's say it's on a day down 3% or more. Okay, we didn't have any. Let me actually take this off. Okay, so now we have implied volatilities that are high and starting to come in. All right, so these are where we're still above the 90 IB, as you can see over here, but the implied volatilities are coming in on the day in those expirations. And if we wanted to see if they're still above, let's say we wanted to see if they're still above their historical long-term average, right? We could look at this at the money IB, and we'll just say above, let's say any amount. Okay, so now we have two. Okay, so there are two candidates here that the IB is high relative to 90. It's down on a day. There's trading in this expiration, and we could see that the IB is still above its long-term historical average. You can see here 310 versus 251. Implied vol are 110 here versus historical average of 106. These are both above. We could also go in reverse if we wanted to. Let me take some of these filters out. Could do another one. Let's say we're looking for volatility, maybe that doesn't necessarily have to be high, but above a certain amount. Let's say 20. Okay, so now I got a lot more, 149 stocks that meet the conditions we set above. And maybe we'll go the other way. Let's see if there's any undervalued or volatilities that are below their historical average. So click on that. Let's say at least 5% below. Okay, so there we go. We got 29 of those over here. Let's say that they're upticking on a day, maybe reverting back. So we're going to put at the money IB up 3%. All right, so there's 3 of them. So you can see here, on April 17th, we have 3 candidates where the implied vols are heading back up, but they're not yet at their historical long-term average. Okay, they're still below. And of course, over 5,000 contracts trading in that expiration. So I think I'm going to stop there, because we did do, a couple different screens where I think people have an idea of how to use this, at least this particular tab.
Yeah, I had someone ask me if I could play my piano, D. I'm just letting everyone know that's an avatar behind me. No, unless Dimitri can create an avatar for me to play the piano. There's no piano there, but it is a nice looking room. Beats the deer head. I know Chuck likes the deer head, but beats the deer head, I think, the piano. But everyone, thanks for joining us today. Another great webinar by D. Thanks so much, D, for putting these on. Remember, everyone, to like us and follow us on all the social platforms. Thumbs up on YouTube would be appreciated. Great job, D, as always.
Thanks, Will. Thanks, everyone, for joining, and have a great trading day, and hope to see you guys tomorrow.
Have a great day, everyone. Trade in peace. Bye-bye.